Well, as we just heard, Link Energy could become one of the very big players in underground coal gasification. Our next guest is a smaller player in the coal seam gas sector, a quite different technology that extracts gas without heating it underground first. Glenda McLoughlin is CFO of Metgasco, and like other smaller resource companies, resource tax and climate change issues are unfinished business. Glenda McLoughlin, welcome to Late Line Business.
Thank you, Tiki. It's a pleasure to be here.
We've heard a lot about mining recently. We've heard much less about gas. Tell me a bit about Metgasco.
Well, Metgasco is a gas exploration company. Our projects are based in northern New South Wales in the Northern Rivers region. We're primarily known as a coal seam gas company, but just this year we announced a very significant conventional gas discovery, which we call our Kingfisher gas field, and we believe it's the largest onshore gas discovery in New South Wales in over a century of exploration. So it's very exciting times for us on the exploration front.
Tell me, back around budget time, you were chugging along quite nicely, and then the resource super profits tax was announced. What happened to your share price then?
Well, yes, unfortunately our share price was hit very, very hard by the proposed resource super profits tax when it was announced, and unfortunately our share price went down by about 30%, and doesn't seem...
Just on the announcement?
Just on the announcement, that's right, and really we've taken quite some time to come back from that impact.
Is that the nature of essentially exploration companies, that if there is some general bad news across a sector, you get that down, and it actually takes quite a long time to get the market confidence back up?
I think that's exactly right, Tiki. I think that particularly in these times, these very uncertain times in the equity markets, there's a lot of volatility out there, and I think investors are very quick to sell out of stocks that they suddenly get a bit scared about. So, it takes a long time to build that confidence to come back in. I think, confidence and trust are things that take years to build up and unfortunately can be damaged in a moment.
Now, of course, that's changed with the new policies of the Minerals Resources Rent Tax. We've got the West up in arms this week at Kalgoorlie. How will that impact you, the new tax?
Yes, well, Metgasco is one of the companies that is going to be brought into the onshore petroleum resource rent tax regime, or the PRRT as we call it. There is an implementation committee being formed to look at the implementation issues around bringing companies such as ours on board.
Indeed, that's quite good news, isn't it, today, because I just see that there's an ex-Woodside executive that actually has been added to that team, which will oversee the implementation of this.
Yeah, we're very pleased to see some petroleum expertise going on to that implementation committee, and I think the great thing about that representative is that that's somebody who has a very deep experience with the petroleum resource rent tax. And the issues that we're very concerned about are things like the compliance burden. Small companies really don't have the capability and the resources to be putting a lot of money and investment into managing tax compliance.
And what about the issue of valuation? I mean, when it comes to the deal that Rio and Xstrata and BHP Billiton have cut, how does that compare, their status now, with your status?
Well, I think that's another issue that I think really needs to be addressed by the implementation committee, because we have a situation now where companies which are at an advanced state of maturity and have a high valuation placed on their assets actually come into the new tax regime with quite a significant potential tax shield because they're able to write up the value of their assets to market value and use that as a tax shield for resource rent tax payments in the future. Smaller companies which are not at that stage of maturity will be coming into the tax regime without that significant tax shield, and it's very unclear as to whether they're going to actually be able to access that in the future.
What about the CPRS and now the new policies coming out from the government and indeed the opposition?
Yes, well, there's very little policy coming out, I think, in terms of looking at an emissions trading scheme or any kind of pricing of carbon at the moment. I really think that what we should be looking at is what is the lowest cost way of reducing our carbon emissions in Australia? How do we go about doing that? Now, the CPRS or a carbon tax is quite a good tool because it provides a price for carbon emissions, and it enables businesses to go away and make sensible investment decisions which actually result in the lowest carbon emission output.
But where does this leave you now in terms of the policies that are on the ground between the I suppose the mining industry, the coal industry on the one side, and the green energy industries on the other side?
Yeah, I think you've exactly hit the nail on the head there, Tiki, which is that really the gas industry, which is really a very practical solution to reducing greenhouse gas emissions, is currently being squeezed out between a coal sector which is being quite heavily compensated under was proposed to be quite heavily compensated under the proposed emission trading scheme, and the renewable sector, which is quite heavily subsidised in order to get a number of projects up. I think that there was a policy view that gas would be able to compete under an emissions trading scheme on its own 2 feet, which it would have been able to. But
what's your view now that we've got these policies in place? What's your view on how this will impact in terms of domestic gas supplies down the track?
Well, I think it makes investment decisions in gas-fired power stations very difficult, because it's quite difficult for gas-fired power to compete head-to-head with coal-fired generation without some kind of carbon pricing. And it's quite difficult for gas-fired power generation to compete head-to-head with renewable energy when it's basically being paid for by the government. So I think that it may result in inadequate investment in gas-fired power generation, which is actually something that we need, because, as you know, renewable energy is intermittent and can only supply when the wind's blowing or when the sun's shining, and so we actually do need gas-fired power generation investment to back up our renewable energy supplies. But unfortunately, the policy environment that seems to be emerging is one which is not really encouraging that sort of level of investment that is going to be required. So I think it's quite concerning from a power generation perspective and also a power pricing perspective, because we're actually getting an outcome which is quite an expensive outcome for energy consumers rather than the lowest cost pricing outcome.
Glenda McLoughlin, thank you very much for joining Late Line Business.
Thanks very much, Tiki.